So how do you get a perfect entry? How do you enter right here and be up $3,800, $3,900 on this trade? Well, the first thing you need to do is you need to understand the overall market context and what you're looking at. So we have the market making new lows here, and then we have lower highs as well. And then also if we scroll to the left, we can see that there's an uptrend here. This has failed, we're below this. We go to even longer term time frame and we see that we're breaking below these second entry short levels. This should have been support. If the market was going to reverse, it would have reversed here. It went a little bit lower, that implies it's kind of weak. This is also maybe support. We see an attempt to reverse here and then a new low. So the context is that we're in an intermediate downtrend here. So that's very important. It's an intermediate downtrend, but the market is going sideways, sort of bouncing up and down, so a slower downtrend. Generally, we want to be trading in the direction of the one bigger time frame, so the intermediate trend or the macro trend. So we want to be taking entries in the direction of this, but we cannot take entries against the shortest term time frame. Unless those have failed, then we're trading against the market as it's currently moving, and we're likely to get stopped again and again and again, trying to pick resistance or support that may never come. So we have a new low here, and then we can look to see where are the structures that have failed. Inside of this structure here, we see that there's a initiative push that should have been a reversal and possible support there. So if we go down to a shorter term time frame and look what happened in that box, we can see that the market bounced here. It came back to there and then it stalled right here. This is a pretty good entry. That's not where I took the trade. I took the trade right here on a stop, and it was immediately profitable all the way down to the bottom here, and it's continuing to go down. So how do we use the microstructures to actually enter this? Consider our context. It's an intermediate downtrend, a longer term downtrend, but in this case, it's kind of going sideways. So we want to wait for a better price towards the top of this range. We can just call the range this. Generally speaking, towards the top half of this range, especially at this congestion area, we want to wait for a better price, and then we want to wait for a failure of the shortest term time frame in that area. So if we use a fixed range volume profile and just drag it here, we can see that this is where volume has accumulated on this upswing. There's potentially resistance here, there's trapped traders here, there's an attempt to short here, there's a push up, there's buyers that are trapped, and the market comes down and you can sell that there potentially. We sold here on a stop. How is that safe? Why would you sell on a stop there? We see big pushes down here. There's a lot of selling pressure and not a lot of initiative buyers that are holding this up. The market is flat here. It's loose, I don't know the right word, loose, thin is that's the right word. There's nobody in here holding this trend up, except there are here when these shorts get trapped, maybe. But we can infer from these big down candles that there is downward pressure. And when there's short-term downward pressure, like weakness in the shortest term time frame uptrend, so there's nobody putting limit orders in here holding it up, and when they do, it breaks, we can infer that there's downward pressure. Our overall context is down in this dynamic. And that's why when we sold here, we're still sitting in this position because we're trading in the direction of the intermediate trend. This is actually a pretty good area to take this off, this double bottom. So I'm going to do that, although it's likely to keep going just for the sake of locking in $7,800 there. I'm just going to lock that in. A different risk management, you might scale in and scale out or hold some, but for the time being, it's a good idea to just take off when you have a lot of profit like that. Although it's probably a better idea to figure out a way to hold it. Anyways, that's besides the point. How did we sell this here on a stop? Well, some of our microstructures that we've been experimenting with and exploring have to do with these little weak buy attempts on initiative candles. So what does that mean? What's an initiative candle? These down spikes. I'm talking specifically about these red down spikes. We see a down spike here, and now we're talking about the shortest term time frame. So forget all the context, all that other stuff. You need to keep it in the back of your head so that you can put the short term stuff in that box, in the right box. But now we're opening up this box. How do you trade in an intermediate downtrend? We have down pressure initiative candles here. If this is going to reverse and this is going to be a trend, this is the shortest term time frame entry for that. If this was going to go, it would go right here. You see that there's some sell attempts, and then we have a buy, and then it props up. Okay, so that's just the structure. We're talking about this specifically. Here's another example of that structure. Right there. Same thing. Initiative push, weak attempt to buy, and then we go below it. So once these start breaking, they become relevant. But they become more relevant when we're looking at these structures and we see that there's a weak secondary attempt. So you can think about this as like a math problem. but we're adding up objects. The first object is this initiative down push. And if you wanted an exercise for your trading journal or whatever, you can come through and just mark on this 15-second chart where are initiative down candles. So these are structures. We can create a structure here. That's one object. The second thing we need for this strategy in this context, remember the context, here's another one, is we need these weak pushes. So when I say these weak pushes, that's maybe not the right way to say this. We need an attempt to buy here, and we need that attempt to buy to then become weak. So we have a reversal here, we have second attempt, and then in this case, this buys and then it holds. You can see a great example of why this should work. If this was going to be the trend reversal level, it would be right here. But then we see as the market comes back to it, it's again support, and then we go below it and you could have scalped that. This is major support here, so it's still holding. But we need that secondary attempt there to make this object math problem, however you want to conceptualize this, to be valid. So the first thing we need is we need these initiative pushes. The second thing we need is we need a response to that initiative push right there. That creates a major level. This major level is significant resistance that we then see be respected later, and we can set limit orders there. So here's an example right here. We have an initiative down push. We have a second attempt to buy that, and it holds. Then we have even a third attempt to buy that right here. And then when that breaks, this is a limit order for major support, or major resistance rather. Okay, so that's our structure. That's a very important structure. If you made it this far through the video, try to memorize that, try to write that down. How do you identify those, rewatch those pieces of it? Can say it again for you. Initiative push plus response plus break creates the structure. So what? In this case, we have kind of a mixed market. The market's coming down to this resistance or support again, said the wrong one again, and it's bouncing. Big buy spike, secondary trend here, okay. In these kind of secondary trends, the way that this object functions, the object I just described, it functions first and foremost as resistance, but when you have a trading time frame that's going up, it then functions as support. So there were some back here inside of this little pre-market thing. Let me find them so I don't waste your time talking to you too long. Okay, here's a good example. Initiative push down. It's a very weak response here. You do see though that the market stalls there, and then that becomes resistance, becomes resistance, becomes resistance. But in this case, we have a trading time frame that is up right here. And then that, once it breaks, becomes support. So if you have a trading time frame that is up, you can then treat these as buy levels once they break. There's probably more. I'm just going to draw these kind of willy-nilly. But here's an initiative push. We have secondary attempt to buy, little one here. And then once we go above it, becomes support. In this case here, this is the same structure, and we're going to get to it, how it just, we got that entry there. This is one here. The initiative push, or the weak attempt to buy, is right here. So we'll kind of drag that this way. And then this becomes your support. It's support right here, right there. Great. In this case, it broke. You see there's an attempt to buy, and then once we go below that, this is a sell entry right here. This is your sell entry. First push below it, you can actually sell at the market sometimes. This is again a trading time frame uptrend, so you don't necessarily want to do that. You get a structure break here. Below this, you can maybe sell on a limit there. That's the idea. So also, just a little tidbit for the next video, you can also buy on a stop above this. You can see the immediate break there, and these levels become relevant for scalping on the open. That's a whole nother video though. So in this case, what happened? Well, we see that these areas are functioning to some degree, except when they get reclaimed. So it comes here, it goes above this, and then on the other side of this, this level here, most specifically, this line right here, should have been support if this was going to go. When we come below that, selling at the market, it's going to go try to find better forms of support, which in this case was down here in this high volume node. So our context is overall intermediate downtrend. We have this here. This is a test of a high volume node in that. And then we look, if we're expecting a break, you can't just sell this necessarily because this is an uptrend and breaking higher. In this context, it didn't go down. In this case, it didn't go down, or it did go down immediately from here. But sometimes it just shoots up. These are failing. So this level here should have been support. Oh, that's the wrong button. This should have been support. Once we break above this, so it's a second attempt, this is now failed. This is the shortest term time frame trend, and right there is your major failure. It's a major failure of the minor trend in the direction of the overall context. There's also one right here. This extends for multiple failures because this is your weak buy attempt. This is a more weak buy attempts up in here. You can see that once the market goes below that, and this trend right here has failed, this is now implying that this is weak. Once it fails, it goes down. And then we have this level here as a sell. And then we have another retest of a high volume node up in here. So now this is confirmation of this trend on a longer term time frame. Then you have second entry shorts here. This creates a second entry short structure depending on how it plays out. And in this case, we can see that if we do the same thing, this is an initiative push here. We've returned to a high volume node right there. And then once we move below this, this is our weak attempt right there. We come above it, move below it, resistance. Or if you would have drawn this as your weak attempt, resistance. Or if you would have drawn this as your weak attempt, resistance. So as long as you're trading confluent trends in the right context, this works almost all the time. Some of the most difficult things in this are decision paralysis by not knowing where to exit. That's a whole nother video, a whole nother series on how do you take profits, how do you manage your positions. But as far as how to find the perfect entry, there are three things. Identify the intermediate context, the context that's slightly larger, and then wait for a failure of your shortest term time frame, and then take your entry right there in the direction of the intermediate trend. That increases your probability to roughly 60% and your risk to reward sometimes 2 or 3, which is a very high profit factor. So this is a more technical video. If you made it all the way through this, I'm going to produce more of these. Please like, comment, subscribe, all that stuff. I hope this was helpful, and happy trading.